Well, I think the selling today is a continuation of what we've been in since really October, which is investors coming to grips with two facts. One of which is that global growth is slowing, particularly in China, and the other is that financial conditions are tightening. So I think we will get some more volatility, particularly until we have more clarity about the Fed and the price of money, which right now is one of the biggest drivers of volatility this year.
What kind of clarity do you mean?
Well, the fact is, we've had a pretty clear message from the Fed that they don't yet view either the developments in China or Europe or tariffs or the market volatility, for that matter, as enough of an issue to diverge from their rate path. I think as long as that's going on, in other words, rates are going up, financial conditions are tightening in an environment in which global growth is slowing, that is a much tougher environment for global equities than we've experienced for the last several years.
Russ, if this period is just an adjustment period to perhaps a little bit of a slower growth phase and maybe rates normalizing but stopping at some point next year, just imagining that it's not necessarily kind of on the precipice of recession, has the market generated a lot of value in certain sectors by really trashing a lot of stocks and segments of the market here? Or do you actually think it's time to just kind of hunker down in some of the more stable parts of the market?
No, I think it has created value, and it's probably a combination of which. We've been lowering our risk within the Global Allocation Fund. We do think you want to get a little bit more defensive, have more of a focus on quality. That said, there are parts of the market that are on sale right now. To begin with, outside of the U.S., stocks were not particularly expensive when we started the year, and they're certainly much cheaper now in places like Japan and emerging markets. I'd say closer to home, we're finding very good value in the energy sector. Just a very simple exercise. If you look at the price to book of energy stocks in the U.S. right now, they're close to the lowest they've ever been relative to the market. And we're still in an environment where oil is at $60 a barrel. It's not at 40 the way it was in 2016. So I do think there are pockets of value in the market today that investors want to take a look at.
What about technology, Russ? What do you tell people, especially the hot FANG stocks, no longer so hot?
I think in technology, you've got to pick your spots. Now, the good news is I never thought technology was in a bubble. We've seen a fairly significant correction, but year-to-date, technology doesn't look that bad. And I think there are parts of the market where we see value in technology. But I'd say, again, some of the best opportunities we see in tech right now are actually outside the United States because the starting valuations were lower, and they've actually been punished even more.